GM, good morning. Welcome to the Milk Road Show, the daily crypto show for people who saw the signs, heard the hype, and said, screw it, I'm in. I'm your host, Jay Hamilton. It's Tuesday, May the 27th, and we've been talking a lot on the show about what's the next meta, what's the next narrative, what's the next opportunity as this bull cycle continues, which we believe that we're still in. There is a big opportunity for the fundamental thesis to finally win in crypto. I'm talking about projects that have real revenue. And when you look at fundamentals, DeFi stands out above anyone else. And within DeFi, you basically have Solana DeFi and Ethereum DeFi. And one thing that stands out when you compare those two is how much more valued Ethereum DeFi is than Solana DeFi. So it brings up the same question that we have when we look at Solana versus ETH, which is, should they trade at this difference in their market cap? Or is there an opportunity to get into some projects on the Solana DeFi side right now before they catch up to the Ethereum DeFi side? So that's what today's show is all about. It's all about Solana and Solana DeFi and the opportunity we see there, which I think, to be honest, might be one of the most overlooked opportunities in crypto right now. To talk about this and so much more, we're joined by Sam Andrew, portfolio manager at North Island Ventures, a crypto-focused investment firm. Before we jump in, I got to tell you guys some really, really exciting news. Milk Road is launching a new newsletter focused on macro. Think inflation, interest rates, elections, all the stuff that is happening around the world that moves markets in meaningful ways, not just crypto markets, all markets. So if you listen to this pod, I'm sure you understand why prices move as a result of macro. And the first edition of the Milk Road Macro newsletter just dropped today. It's an absolute banger. It's written by Thomas Malloy. He's a journalist who just joined our team. He's got 8 years of experience writing. You might have seen him on X as at Thomas on Markets. You should give him a follow if you haven't already. And if you want a great newsletter in your inbox every Tuesday and Thursday, click the link in the show notes. Sign up for Milk Road Macro. Today's episode is brought to you by Ledn. Get cash without selling your Bitcoin. It's also brought to you by Meanwhile. Ditch dollars, insure in Bitcoin. Without further ado, Sam, welcome to the Milk Road Show.
Hey, Jay. Thanks for having me.
Yeah, pleasure to have you, my man. Last time you were on the show was back when we were Web3 Academy a few years ago. So a lot has changed in my world, but also in yours because you're now at North Island Ventures. So it's exciting that we get to cross over. Sam and I are also old friends for about 20 years now. So you might get some of that vibe throughout today's show. I want to start with, I'm going to tee this up a little bit, Sam. So sorry for taking the thunder as soon as I bring you on. But I want to start by showing two charts that I think really paint a important picture that everybody needs to see right now. So first chart I've got up here is monthly application revenue. It's ETH versus SOL. And what this chart shows is that over the past year, Solana application is 4x higher than ETH application revenue. Okay, so clearly, and most of that is DeFi. Okay, and then the second chart I want to show is monthly application revenue beyond just ETH, all chains. And when you see this chart, Solana is green on this chart, you can see that Solana absolutely dominates application revenue. And again, as I said before, most of this, over 50% of application revenue on Solana, is DeFi. So what that says to me is, wow, there's a lot of revenue being generated on Solana, and a lot of it is being generated by DeFi. Okay, is everybody missing a big opportunity here? I mean, not everybody. A lot of people are hyped on Solana DeFi, but there seems to be a setup here that sort of my alarm bells start to go off. And I think, okay, we got to watch this, which is why I wanted to bring you on the show today, Sam. Before we get your takes on Solana DeFi, let's just back up a second. You were at Accelerate last week. Let's talk about Solana first. You were at Accelerate last week, which is one of Solana's conferences. I think it might be their first time doing it. You can tell us the background on Accelerate. But Solana's been through, it's got a lot of FUD recently as a result of meme coins, basically meme coin craziness. And a lot of people saying, oh, Solana's just meme coins. That's all it is. What's your take on the current state of Solana?
So let's touch on where things are today with Solana. The reality is, like, there's a lot of speculation in crypto, and there's a lot of speculation on Solana in particular. That's what a lot of the activity that we're seeing on Solana is about, right? And you see that partly because Solana is probably the easiest and best place to create tokens, trade tokens, use leverage, perps, etc. And as a result of that, it's highly cyclical. And so we saw a huge run up in all that activity and call it like Q4 of last year. And then that was punctuated by the Trump token launch in January 20th, I believe it was. And then it's faded subsequent to that. Albeit in the last few weeks, we've seen some of a bounce back in some of the activity. And I can kind of touch on a little bit more what's going on there. That's where Solana is right now. Where Solana is going, listen, Solana has fantastic infrastructure, arguably some of the best infrastructure in crypto. And the way I kind of position it is they have fantastic infrastructure, but call it, depending on who you ask, poor to mediocre assets for the most part, right? Whereas Wall Street has like poor infrastructure, but great assets. And over time, those two will converge. And part of the Solana conference Accelerate last week that I attended was about exactly that, right? Is how do we meet the worlds of kind of crypto and what blockchains and Solana in particular can facilitate with where Wall Street is today. And so there's a huge emphasis within the Solana ecosystem to get real world assets on chain to push regulation forward. And that's where Solana is going, that it will maybe be able to graduate out of this kind of meme driven activity, which is helpful. And that's like built a lot of the core infrastructure. But what we think is possible is a lot of this core infrastructure can actually be used for other things beyond trading memes.
Okay, so just to double down on the obvious question here that I think a lot of people have is there's fear that Solana is only meme coins. That narrative is pervasive, especially post-Trump meme coin, which was a really great test for the infrastructure, as you said. The Trump launch tested the infrastructure in a way that had never happened before. We had Raj, co-founder of Solana, on the show a few weeks after that, and we talked about how amazing of a test that was. But you're not worried about the meme coin craze of Solana and that Solana is only a meme coin chain.
You got to deal with the reality of what things are right now. And a lot of the activity on Solana is meme driven. You just need to be aware of that, right? But to facilitate that, all that meme trading, there's actually great infrastructure that has been built, a lot of which is some of the DeFi stuff we maybe get into. And that is the core foundational element of Solana DeFi that should be able to take the ecosystem beyond meme coin trading.
You mentioned that Solana the past few weeks, May has seen a bit of a turnaround since, March, April were a real struggle, not just for Solana, all L1s were
For
down.
everything.
So,
Yeah.
let's be clear here, right? Like, this isn't a Solana only issue. What's happening in the past few weeks in May that's caused the turnaround?
I can rhyme off of just a few stats to like kind of set the table and then explain kind of what's been driving that. And if you listen, just simply look at transaction volumes, like the number of transactions on Solana are today roughly back to where they were in their call it like December, January peaks. You have DEX trading volumes are roughly up 2x from where they were in March, April, and roughly where they were towards the end of October. There is Solana like application revenue, some of the charts you showed earlier. If you look at kind of where things are today, it's up roughly 50% in dollar terms from where it was in kind of March, April, and roughly where it was in like October levels. And so what's driving that? Listen, the reality is of what Solana is today is like that's primarily driven by token trading and launches. And if you have like token launches on Solana right now, are up roughly 40% from where they were in the March, April low. And that's roughly in line with where things were in November. So this recent activity, we got to be honest with what's happening here has mostly been driven by meme coin launches and trading.
Which I think is, I'm trying to think of how to position this. You need to be aware that that is happening because it is going to impact Solana's numbers and its ecosystem massively because meme coins are very speculative and very cyclical. But I think as well, there was this there was this moment when everyone thought meme coins was going to go away, like post Trump, and
Yeah.
a lot of FUD came out, and just the Ponzonomics behind a lot of these meme coin launches. But I don't know about you, but my belief is that meme coins are not going away. At least, certainly not in this cycle. Maybe in future cycles it changes, but I honestly don't even know if it goes away in future cycles, because I think that the world loves to gamble, and who doesn't want to gamble on attention and memes and internet virality? Like, people will want to gamble on that long term. So I think I'm not so worried about that in the long term. I don't know what your thoughts are.
Yeah, I think people tend to conflate things that are cyclical with things that are sustainable. And there's no shortage of industries that are highly cyclical, but yet still sustainable, right? And that's like any commodity industry, right? Whether it's copper, iron ore, nickel, et cetera, highly cyclical, but also sustainable. Tourism, anything hospitality, these are all industries that are cyclical, but still sustainable. Now, crypto is that to an nth degree where it is far more cyclical, but I do believe there's some degree of like sustainability to some of the meme coin trading, albeit in kind of Q4 and certainly in January off the back of Trump that seemingly were like unsustainably high levels. But as you mentioned, Jay, like there is an interest in people to speculate on things, whether that's a meme coin token going up or the outcome of a basketball game or anything that's kind of memeable that's capturing people's attention.
The other thing to mention, just to wrap up the Solana discussion, is developers on Solana. I, I'm sure most people know this stat by now because it's been talked about a lot. But Electric Capital did a report. They do their annual developer report. I believe they released that in February, and they showed that Solana added the most developers in 2024, more than even Ethereum. So that's a real tailwind effect of more developers means more builders, means more businesses, means more apps, means more protocols, yada yada yada. So that's big. Stable coins as well on Solana are growing rapidly. We're sitting around 4 billion at the end of last year, just November, December, and it's up to almost 12 billion today. So that's still small numbers in comparison to the total stablecoin market cap, but that growth says a lot about more activity happening on Solana. A lot of that is being led by PayPal. Stablecoin is doing really well over there, and you could see a lot of potential for PayPal stablecoin. So there's also some hard numbers that have kind of been operating in the background, and people don't pay attention to this stuff as much because it's not newsworthy big noise, but there is a lot of these fundamentals happening as well. Any thoughts or anything to add there?
Yeah, I'll double click on actually both of those. So in terms of developers on Solana, I mean, this would be a good opportunity to circle back to Accelerate. So Accelerate was Solana's flagship conference in the US. It was the first time there's ever been an ecosystem develop or host such a large conference in the US, right? So it was held over 4 days. The first 2 days were developer only. There were about 1,000 developers in New York City all kind of working through technical upgrades and specs and getting into the weeds of what was going on in Solana. The subsequent 2 days were for like call it everybody else. And that everybody else was, both developers. It was a lot of regulatory folks. So there were congressmen and senators that were present working kind of through policy. And then there were investors and entrepreneurs of, various Solana applications. And Solana is very much pushing itself to be within this, call it meta of US as the crypto capital, right? And last week's Accelerate conference was exactly that. The second
Let me
thing
let
I'd
me let
point,
me ask you quickly there. You've been to ETHCC,
yeah,
or sorry, ETH Denver, not
yeah,
ETHCC, ETH
December,
Denver.
yeah.
Compare them.
So ETH Denver, notwithstanding the name, ETH Denver is a kind of total misnomer. It's not organized by the Ethereum Foundation. The only event the Ethereum Foundation hosts is DevCon, which I've also been to, but that's never been in the US. So ETH Denver is larger by number of people, but it's not concentrated in one area. There's a whole bunch of side events. Every ecosystem kind of has its own thing. Whereas Accelerate was all geared around Solana in terms of what's being built, what exists today, where are things going, and what can Solana do from a policy standpoint. And it
Mhm.
was pretty impressive to see. The other thing I would note is, we've met with certainly most Solana founders, right? Of all like the big Solana applications we met with. And across the board, like I'd consider all these entrepreneurs very solid individuals, right? And you see in conversation with them, everything being built on Solana is thought of as a startup, right? Which almost sounds like, well, shouldn't it be? But that hasn't always been the case in crypto. And why I highlight that is because every Solana application being built, like there is a clear business model, right? What is this product? Why do people want to buy it? Right. And that has kind of generally lacked sometimes across different crypto ecosystem and I find like a key differentiator from kind of like a cultural standpoint of
I
what
was just
goes
gonna say
on the
that's
Solana ecosystem.
cultural. Yeah, I agree. That's totally cultural on Solana. Solana has this culture of I'm trying to think how to pinpoint this. Exactly what you're saying, like the business builders, product market fit, right? Is the viewpoint that everybody in that ecosystem operates under, which is a little bit, it's not to say that other ecosystems don't operate that way. They do, but it's, I don't know, there's a difference. And I can't put my
It's
finger on it, but I can feel it.
Yeah, it's more, I mean, it's more evident when you just speak to these developers slash entrepreneurs on Solana. Like they'll explain to you what their business model is, like what their product is, how they're going to make money, and why this product is valuable to their users, right? And the difference is like all the emphasis on Solana is about user experience, right? We're kind of mostly past the stage of building infrastructure.
Mhm. Okay, stable
Like the
coins.
infrastructure is still important and so forth, but like user experience, they've
Totally.
like really dialed in that like this is the most important thing right now. So yeah, stable coins, we've seen roughly on Solana, stable coins go from like 3 billion to like 12 billion. And that 3 billion was kind of tail end of last year, 12 billion is roughly now. Um, there's been a dramatic increase, right? And almost as much as like that's almost the same growth in stables as we've seen on Ethereum, although Ethereum that equated to about 11% growth. Now, part of that growth, I see you got the chart up now, like happened around the Trump token launch, right? So we saw a tremendous inflow of USDC around the Trump token launch because everybody wanted to participate in that. But what's also interesting to highlight is that a lot of that stablecoin, and it's mostly USDC, has stayed in Solana. It hasn't exited. So it came in on Trump, but it never actually exited, or so far has not exited. And that is slowly maybe filtering its way into various Solana DeFi applications.
Selling your Bitcoin should be a last resort when you need cash. That's why there's Ledn, the trusted platform for Bitcoin backed loans. You can unlock cash in as little as 18 hours with no monthly interest payments and no prepayment penalties. They've issued over 9 billion in loans and never lost a single Satoshi of client funds, even during the chaos of 2022. If you're a long-term hodler, this is the move. Get liquidity without selling at milkroad.com/Ledn, spelled Ledn. Meanwhile is the world's first licensed and regulated life insurance company built for the Bitcoin economy. They do everything in BTC. You pay in BTC, they pay claims to your family in BTC. You take out policy loans entirely in BTC when you need liquidity. Protect your family from life's uncertainty and a broken financial system. Build intergenerational Bitcoin wealth while the cost of living skyrockets in dollar terms. Plus, get all the tax and legal benefits of life insurance now in Bitcoin. Visit milkroad.com/meanwhile to join the waitlist and get early access to the world's first Bitcoin life insurance. Okay, let's talk about Solana DeFi now. We talked about Solana longer than I expected to, but I love talking Solana. Give us the lay of the land of Solana DeFi. How do you think about it from a high level?
Sure. There's two simple business models in DeFi, and this is across crypto. There are decentralized exchanges, commonly referred to as DEXs, and that's where you can trade all sorts of different tokens. The second business model is borrow lend, and that's where you post collateral And with that collateral, you can get a loan. And the simplest version of that is usually post some sort of like blue chip crypto collateral, whether that's Sol or some form of wrapped Bitcoin. And then you get a stablecoin loan, usually in the form of USDC. Those are the two kind of primary business models. And the primary borrow lend platform on Solana is Camino. And then the DEX landscape is a little bit different, a little bit more complicated. And I can kind of outline that landscape as well, if that would be helpful.
First, how much of borrow lend on Solana does Camino have?
There's a couple billion and of like kind of TVL, and that's equates to like almost 90% market shares. Camino is like now completely dominated borrow lend on Solana.
Who's Camino's biggest competitor there, or is there even really a competitor?
There was Solend was another one. And I mean, just you know, due to kind of competing forces, Camino has emerged. What was announced last week at Accelerate is Jupiter is launching a borrow lend product, and that's a new call it product vertical for Jupiter.
Okay, which kind of leads into this DeFi super app business model that's happening. Before we talk about the DeFi super app, though, give us a lay of the land of the DEX environment in Solana.
Sure. So Dexon on Solana, you can think of in call it three categories. The most simple category is trading spot, right? That's spot Sol for USDC. Also, you would trade Sol pairs with meme coins. So meme coins are all priced in Sol. That's the simplest DEX. The main one, the kind of two main ones there would be Orca and Radium. Radium primarily trades meme coins. The second iteration of DEXs trade perps. These are perpetual contracts. That's effectively perps are a form of crypto leverage. Jupiter is a perps DEX. Drift as well is a perps DEX. And then the third category sits on top of those DEXs, and that's what's called an aggregator. Jupiter is the primary aggregator. And what an aggregator does is if a trader wants to execute a trade in any type of trade, whether it's spot or perps, meme coin, non-meme coin, they would usually have to go to the specific applications. That can turn into be a bit of a pain to move from one application to the next to do that. And so Jupiter sits on top of all these DEXs, and the trader would go to the Jupiter user interface and just go there to execute the transaction. And Jupiter will wire or route that transaction to the appropriate DEX to get the trader best execution.
Okay, so we've got a thriving chain in Solana that is in a comeback and was really down bad as a result of things outside of its control, right? It's not like the fundamentals of Solana changed here.
Yeah, I would reposition them down bad a little bit. That listen,
Mm.
the Trump token launch was an anomaly. Like no one really saw that coming. And you look at all the metrics, like it just in that like 1 week period in January, like everything went through the roof. So yes, off that peak from like mid-January, yes, it was down bad. But when you look at it kind of where things were for most of Q4, it's down, but I wouldn't describe it as like down bad. It just
Yeah.
had like an abnormally high peak in January.
I'm just media, so I have to exaggerate everything in order to get listeners to tune in. You are correct though, and then the other big factor here was macro, right? Tariffs and all this macro stuff that has absolutely nothing to do with the future of crypto or the fundamentals of Solana. If anything, the future of crypto is in a better position on a macro level now than it was 6 months ago as a result of Trump and all of the effort that's happening around American legislation and whatnot. We don't need to dive into any of that right now. We'll do other episodes on that. So I want to talk about these. Actually, before we talk about, I want to talk about Jupiter, Radium, and Camino. Where does Jito fit in? Can you explain where Jito fits in? We haven't really talked
Sure.
about that yet.
So Jito is not like Solana DeFi, like DEXs and borrow lend platforms are, but it is somewhat related. And it's somewhat related in two avenues. The first avenue is Jito Sol. Jito Sol is the most commonly and largest Sol LST, right? We're probably familiar with what an LST is effectively a staking derivative token, right? The second way Jito is connected to Solana DeFi is its foundational infrastructure. It's developed foundational infrastructure to Solana, and that is what's called the Jito block engine, right? And so transactions often get routed through the Jito block engine in times of highest demand for the Solana blockchain. And those are times when there's a lot of trading happening. And the reason they get routed through the Jito block engine is because traders push their transactions that way and effectively pay a higher premium to do that. And they pay that higher premium because that nearly guarantees that their transaction will land exactly the way they want it to on Solana. And that's most important when there's a certain arbitrage trade you're trying to put on, or you want to kind of protect yourself from getting from your transaction not landing exactly the way you want it to.
Okay, let's talk about some specifics of each of these. So if we let's look at Jupe first. If you believe in stablecoin volume continuing to grow on Solana, then Jupe will get a piece of that. Jupiter looks good. If you believe in meme coins on Solana, then Jupiter could get a piece of that too. If you believe in the AI narrative, which I think is going to come back, then Jupiter is well set up to do well on that too. So it feels like, give us what's your take on Jupiter right now? What is exciting in their ecosystem that's coming up? What's your overall look at there?
Yeah, so I generally concur with what you outlined, Jay. The other thing I would add is Jupiter is a little different than a number of the other kind of DEX protocols, sorry, DeFi protocols that we outlined. And that is, since Jupiter is this aggregator, it has this front end that a lot of users come to begin with, right? So it practically owns that like front end relationship, right, with that customer relationship. And so to the extent they own that, there's more product verticals they can stack up and sell to that user, right? Hence the launch of Jupiter's Barlend platform.
And when you look at Jupiter, what like are you um, are you seeing a path for them to continue their success and to become this DeFi super app? Is that possible? Do you think that plays out the way that they're going? Where do you see the opportunity, and then maybe where's the risk on Jupiter?
Sure. So the opportunity for Jupiter is what I mentioned is they own that front end,
Mhm.
right? And no other protocol has that type of relationship. So to the extent they can leverage that to sell other products to that trader, that's their opportunity. Where other like Solana DeFi applications is they've got like top-notch product specs, right? For example, Camino, as I mentioned, already dominates borrow-lend, right? They got like 90% share. And so it is that becomes a pretty hard market share to attack. So exactly how this plays out of like which one of these becomes like the DeFi super app remains to be seen. Whether or not there will be one that actually emerges as a DeFi super app or also remains to be seen. And we may have a couple of these emerge as like kind of the dominant DEX and the dominant borrow-lend platform.
So it's still too early to claim anyone the winner, even though Camino owns on the borrow-lend side, for example, even though they own so much. I mean, it's sort of similar to what we talk about a lot on the show. Of it's still too early to claim the L1 winner, right? Like we all love to talk about either Ethereum or Solana, but even that, it's very early. It could be another chain, another general purpose blockchain could win in the long term. So similar state within Borrowland for Camino versus Jupe, or maybe even somebody else that comes in the future.
Yeah, I'd say kind of similar state for this like broader DeFi super app.
Okay. What about Radium? So Radium's very interesting because it really, as you said, it's a meme coin trading platform, so it does very well when meme coins are doing well. Is that a like in some ways I see that as being a benefit if we get a meme coin season again, which I could see us getting. But in other ways, I see that as a flaw because it's so one dimensional and it feels like it, could Radium be disrupted by somebody else? What are your thoughts? Give us your pros and your cons on Radium.
Sure. So Radium was very much the darling in Q4 of last year as meme activity just went through the roof. There was a headwind to Radium, which was from a competitive standpoint. They were heavily reliant on tokens graduating from Pump.fun to Radium. And the concern was at some point, Pump.fun may launch its own DEX and kind of uh, forward integrate. That's what transpired. And Radium was, the token price was hit pretty significantly off the back of that. Now, what is coming to fruition now is there's like a handful of different launch pads, right? So last year it was Pump Fund dominating all the meme token creation and minting. Now Pump Fund still dominates, but Radium has its own launch pad. Believe is another one. There's a few others that have recently
Boot.
emerged. Um, and so how that, like, this is literally within the last few weeks, right? And so that's part of the call it meme coin revival we're seeing, is partly because a whole bunch of these different launch pads play out. So back to your question on, like, how does Radium participate in this? Like, well, if meme coin activity is going to increase, like, Radium will certainly benefit from that, or almost certainly benefit from that. But along with that, it moves with like the highly cyclical nature of meme coin trading.
How much of a threat is Pump.fun's DEX to Radium?
I mean, the Radium token dropped like roughly 50% when it was announced, right? So like people were really concerned that if the crux of Radium's model was like tokens graduating from Pump Fund to Radium, right? That model has been undermined, and so now some of those tokens, some of that graduation still happens, but now Radium is building its own platform, launchpad platform, and it has, and like now that's the avenue well, token creation and trading.
Mhm. Okay. What are the so I think that the obvious thesis to me right now is if you believe in Solana and you believe in a lot of the narratives around Solana, such as, I mean, AI, meme coins, a lot of that. If you believe in those narratives making a comeback in the next year, then I mean, look, you could just go buy Solana and keep it really simple, and like that's a great investment, to be honest. But you can go a level down and try to take advantage of some of these DeFi apps, which will do quite well if all of these narratives come back. Uh, I want to talk about two things. One is on the fundamental side, on the Ethereum side, we talk a lot about the protocols that have buybacks, and I know Jupiter has a buyback. Do any other talk about buybacks? Do any other of these tokens that we talked about have buybacks yet? And how do you see that playing out? And is that something that might come and might be a positive side for these projects?
So yes, like buybacks or burns exist across Solana DeFi, and they happen to various degrees, right? Some protocols, like a big chunk of their fees go to buybacks, others a smaller percentage. Having, I think some harmonizing all this stuff so it's more evident as to what's going on with the fees will be hugely helpful for crypto and Solana more generally, and we'll kind of get there. But yeah, like there's this concept of buyback exists in Solana DeFi. That is true.
Okay. Okay. So that's real positive. What are the challenges or the risks with Solana DeFi projects? We talked before recording about the large FDV compared to market cap that a lot of these projects have.
Yeah, so separate from the cyclicality we've already touched on, yeah, one of the challenges that a lot of these Solana DeFi application tokens, many of which were launched all like end of 23 into 2024, came at like large valuations, right? Whether that was market cap, FTDs, and that's because they had pretty big unlocks, right? And that's likely weighed on a lot of these on the prices of these tokens for a while, and that remains a headwind, notwithstanding all the tailwinds we talked about Solana more generally and Solana DeFi.
So before we wrap here, Sam, as you as you look to the next year, what are you going to be watching for on the on the Solana and the Solana DeFi side that will get you excited, or that might be like, what are the catalysts and what are the I mean, we talked about the risks, so more so, what are the catalysts that you think could really drive this?
Yeah. There's catalysts on two sides. On the regulatory side, if we see legislation, it seems like this Genius Act is moving along fairly well, but if we see market structure, that'll be super helpful from a regulatory standpoint. And then from a more like crypto specific standpoint, if we see tokenized securities, which I think is in the works, and those tokenized securities will likely come in two different flavors, I think that has the potential of like catalyzing a lot more trading activity. We talked about how so much trading activity on Solana is meme related. If we see these tokenized securities, that could be a complement to all the meme coin trading activity we've seen in kind of a slightly different avenue.
If we see tokenized securities, who's going to buy them? Like, that's the thing I can't figure out, right? Is there's already great access to buy securities through regular TradFi platforms. Look, you can say that the infrastructure isn't great and it could be improved, sure. But is it enough of a like are those inflows going to switch from their current pipelines into new pipelines? And is there enough of a benefit for those buyers to come over and buy them in the tokenized way? Is that what you think is going to happen?
I think the benefits twofold. Is one, you have greater access. So yes, you and I have like in the US/North America have like pretty easy access to buying a whole bunch of securities that we want. That's less so the case outside of the US. For example, in the UK, like it's not straightforward even to buy the Bitcoin ETF. Secondly, if you have this like tokenized asset, then there's a potential for using it like you can say use your soul, right? You can use it as collateral for a loan, you can supply it. There's income generating streams you can generate from having a effectively tokenized security, which is obviously not something you can do when you just own the share outright.
Totally, totally. Yeah, yeah. And do you think like do you think the outside of outside of the global part, I get. You don't have access to buy the securities right now. Okay, now you have access because you can do it through blockchain rails. Awesome. That feels, I guess, is that institutions or is that retail? Because in the
No,
institution,
that's retail.
that's retail, right? So, okay, so that's great. I wonder how much that moves the needle. I think it'll slow and steady, probably.
Yeah, so there's two prongs to it, right? So the first is retail, and the reality is like for a lot of the stuff we've been talking about, whether it's Sol or certainly like Solana application tokens, like retail flows are pretty important for those. So at the margin, like that is actually super helpful. The second prong that could later happen, and this is certainly hypothetical, is that in a world where you have a KYC'd tokenized security, right, that has all the same legal rights as a share and trades 24/7, then as you know, large asset managers, institutionals have like fiduciary responsibilities. Are they then should they then be responsible, or should they actually be trading in the venues that trade these things 24/7 as opposed to during regular market hours? That's an entirely hypothetical debate, but it's possible that you could see that transpire.
So let's say we get a market structure bill this year. How quickly do you think we get scalable tokenized securities?
I think you actually get tokenized securities before market structure.
I mean, it already
And,
is kind of happening, right? Like you can
but
buy Coinbase on Base, like you can do a little bit of it.
there's like different flavors to tokenized
Mm,
securities, right? It was kind of what I was alluding to before. So to have a full KYC tokenized security, this is what like Superstate is leading, and you have shares that are like taken out of the DTC effectively, which is where the repository where all the shares are registered in the US and are then become uh, like then move natively onto Solana. That requires a tremendous amount of like infrastructure and development to happen. That's starting slowly, but that type of tokenized security is going to be a little further out, and that's more if institutions were to participate. That's the type of tokenized security you could see them participate in. The second flavor of tokenized security, which is probably near term, is effectively just a synthetic version of a share in a company that is minted on a blockchain, Solana, for example, and then that effectively tokenized air quote security is traded on any Solana DEX. Now that could happen much faster. The difficulty with that is you actually don't have any of the shareholder rights, right? There's no way of paying out dividends or like things like that, or voting on anything. It's purely like a synthetic representation of the shares, but it's not actually like owning the shares. Whereas the first flavor I walked through was like full KYC with Superstated doing that is equivalent to owning a share.
right. So, uh, my take on that would be it's really the first flavor that is going to move the needle here that we're waiting for, that most people will want access to. The second flavor is like short term, exciting, great, but it's not
The
gonna.
second
It's not.
one,
It's not gonna.
the second one probably drives or could drive a lot of trading activity.
Put it in the short term.
Yeah, I mean that's all your people who the rest of the world that struggles to buy this
Right.
US listed security, a synthetic version on chain is probably going to be good enough for them, right? And the reason why I say that is those are the same people who own, to some degree, those are the same people that own Tether, right? US,
Right.
and the reason they're comfortable in owning Tether, even though there's been questions at times of like how well backed it is and it doesn't pay interest, like, yeah, well, I'd rather own that than no US dollars to begin with. It's like, yes, I'm probably aware it's not the
Yeah. Yeah.
best version of a US dollar, but it's in comparisons to nothing, to not owning it, it's still better.
It's so true. It's so important to put yourself in the context of the country you live in and the access you have, and to remember that more than half the world doesn't even have a bank account, doesn't even have access to a lot of these infrastructure that we take for granted here in North America. Sam, absolute pleasure to get you on the show today. Thanks so much for joining
You
us.
bet. Thanks for having me.
Thanks for listening in, everybody. I got to remind you that none of today was investment or financial advice. I am not your financial advisor, and neither is Sam. You should do your own research, and you should only invest what you're prepared to lose, because investing is risky. And if it was easy, then everybody would do it, and everyone would be a millionaire. But it doesn't mean you shouldn't invest. That's why you got to listen to the show every day, so we keep you on top of the news. As I always say, if you want to do me a favor, subscribe, hit a like wherever you're listening to us. It does great for the show. Really appreciate it. We'll see you all back again tomorrow. Have a wicked awesome day. Thanks for tuning in, y'all. Before I let you go, I got to tell you, our friends over at Gemini are doing a super cool contest right now. They're giving away 2 Tesla Cybertrucks. It's called the Cyber Beast Edition, and it is a custom Cybertruck wrapped in a custom Bitcoin design. It looks freaking awesome. Basically, all you got to do to get an entry in order to win these Cybertrucks is use your Gemini credit card or trade on Gemini Exchange. For every $50 you spend on your credit card or you trade on the exchange, you get 1 entry. So check it out. It goes until June 18th. It's open to US residents 18 and older. So sorry to everyone else around the world. But if you're in the US and you want to get a chance to win a sweet Tesla Cybertruck, check out the link in the show notes. spend your money on your Gemini credit card or trade on their exchange, and you could win a Cybertruck. And if you win, I hope you come pick me up and give me a ride. All right. Thanks for listening, y'all. See you again tomorrow. Have a wicked awesome day. As always, if you liked today's episode, please hit subscribe and make sure you follow us so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, we're going to also leave a link for Milk Road Pro. You get access to our portfolio where you can see exactly what we are buying. This is your #1 resource to help you invest successfully in crypto. One final note, this show is for educational purposes only, and nothing we say is financial advice. Investing in crypto or any asset is risky, and you should never invest more than you can afford to lose. Thanks so much for listening in, my friends. Have a wicked awesome day.